Viv Gummader from Ranswith and Paul Theron, the Managing Director of Vestact, with us as we wrap up the first quarter of 2019. We spoke extensively in the first part of the show this evening all about Naspers and its plans to split its business, to put its very sexy global internet businesses in a new listing on the Euronext exchange. Now, just 15 months ago, a young man called Marcus Jooste had a very similar idea when it came to putting the Steinhoff primary listing on the Frankfurt Stock Exchange. That didn't end very well, but these stories are not the same story. As we've learned from the PwC report in the last couple of weeks, this was a monumental 105, 106 billion rand overstatement of profits over a 7-8 year period, Viv.
The currency right there.
Yeah.
It was, look, I mean, the amount of fraud that happened there was so monumental that it couldn't just be one person, and it can't just be this one individual, but it just can't be the individuals that are involved in Steinhoff as well. It has to be outside, either negligence or outside, cooperation or turning a blind eye to what was happening. We are talking about multiple years of misstatement of profits, inflating the amounts of money coming through, and the second part of it is that, when you look at the stuff that's been talked about, Steinhoff says it's going to make sure that those people are held responsible. It's not up to Steinhoff to be held responsible, to hold people responsible. This is a criminal matter. It requires courts to hold people responsible.
If you consider how long it has taken to get something as relatively simple and as clear and as transparent with the cooperation of a man called Jack Milne, who ran something called the PSC Guaranteed Growth Fund 15, 20 years ago, in a alleged fraud, involving Tygon and Shawcell and this the sort of round tripping of shares through this PSC Guaranteed Growth Fund. At least that's the evidence that Jack Milne has fessed up to, and he served jail time on that basis. It's taken 15 years, and we still don't have a conviction on something quite small and quite simple. Is there any chance, Paul Theron, of justice for Steinhoff victims?
I guess, look, the colluding parties were the German-based audit firm, small-town audit firm, and then Jooste with them cooked the books. Deloitte, who were doing the global audit of the group, in terms of the way auditors work with each other, there's like a code. You don't question your colleague audit. They should have, because that's where the problems were being packed away.
This notion of professional skepticism failed dismally,
So I think what might happen is we might have action by our local commercial crimes division. We might also have the European, Dutch and or Germans getting involved, which I think would be more encouraging, because they have the resources inside their ranks to assess the financial crimes a little bit better. So I'm more confident that we will see action taken. The problem is it's going to be an academic victory, because there's no way any of us that lost money on that Steinhoff investment are ever going to see anything again. In fact, my advice for those that are hanging on to their Steinhoff shares now is that's pointless. That's a tiny slice of ham in a very ugly sandwich.
And unfortunately, that sandwich has been attacked by some big Broma flyers, if you like.
Exactly.
Christo Visser is willing to negotiate on his 59 billion rand claim. The Techie Town guys are coming in and wanting Techie Town back. There are lots of people wanting a piece of this.
Who really owns the company are the bondholders, because they have seniority. So there's this massive bond debt, which has only not been called because the company has offered them higher payouts and a roll-up benefit in order to extend and pretend those loans. So that's going
Is Steinhoff bust?
I think it is, frankly, hopelessly and totally bust. So it's unfortunate, but I think it's time to thank that one, kiss it and send it into the dark.
I mean, the time to break it up and to sell off the bits, because there are some nice businesses in there. There's Poundland in the UK, which is a tidy little budget business. There's the mattress firm in the United States. There are brands all over Southern Africa. There are brands in Australia, multiple brands across Eastern Europe. Very successful individual operating companies.
Exactly, but unfortunately those assets are far smaller in value than the total debt which is outstanding and the potential for legal claims. So it's another salutary lesson, unfortunately, that capitalism is the best system, stock markets are wonderful and fantastic, but every now and then you're going to run into a fraud type situation where losses will be sustained. And that's a good lesson, I guess, for all of us to have learned. Because many of us, myself included, thought that, Marcus Jooste was a very bright guy and that we would make money investing with him.
There was no question that he was a very bright guy. the only part where that theory fell flat was you didn't make any money out of investing in it. Another factor that's come through in this quarter is, and Warren Buffett's great quote is, you don't know who's swimming naked until the tide goes out. And the debt levels, particularly of South African companies that have used this country as a base to build businesses and then have taken on huge debt to go outside of South Africa. Steinhoff was one of those. And we've also seen companies like Aspen Pharmacare, for example, end up with a debt problem. Tongaat Hewlett has ended up with a debt problem. These are not problems until they're problems, and suddenly valuations crash and burn, Viv.
That's the power of gearing. If it's good, you get a lot of more money. If it's bad, then you lose a lot more money. And I think that's one of the reasons that we've seen South African companies under such pressure. It's the fact of the matter is that we have just underperformed as an economy for quite some time, and it's very difficult to understand how we're going to get, South Africa-based companies, except for that overseas exposure that they always, tout out there, to basically succeed in an environment that's as bad as it is right now.
But the overseas exposure is the double-edged sword for South African companies, because in order to get that overseas exposure, you need to take on lots of debt. In order to take on lots of debt, you take on lots of risk. You go into new markets. Those new markets then don't give you the returns that you were anticipating to pay off the debt, and suddenly you would have been better off staying at home, Paul.
Yeah, unfortunately, we've just seen so many examples, and you've listed a number of them, but there are others. I don't really know what to say, because when the wind is behind your sails, everything is fantastic. But when it comes from the front, it can be a dire, dire situation. Also, we know in our markets there are a lot of short selling interest ranging around. From one week to the next, you see another story pop up. Suddenly, out of the blue, another blue chip company that was apparently doing super well is now battling with proximity to its debt covenants. So it's been a shocking and horrible time, and the problem is that when at the first whiff of trouble we get share prices falling 30-40%, which in a way almost exacerbates the problems that many of these companies have, because then it becomes very visible, and often their directors have share options that are then out of the money. And we've seen some real horror stories where people are being forced to sell into weakness. I don't know. I mean, it's almost I was interested by your observation at the beginning of the show that the market's actually looking quite good this year. Because it's really only
if you're an index investor, so if you could do the boring stuff and you just go and buy the top 40 index of the JSE, which you can do through the JSE platform, you don't get any va-va-voom. But what you have got is an index move of 8 or 9% so far this year. You're doing better, courtesy primarily, weirdly, of the resources sector, the industry that was supposed to be dead and buried by now.
The most unreliable part of our...
is the one that is keeping the valuation of the overall market afloat.
And I don't know what to say about that, because as everybody keeps saying, with those mining stocks, it's about timing the market, not time in the market. And the problem is they don't ring a bell at the top or the bottom. With
well,
those
I mean,
stocks.
and maybe the Chamber of Mines, or what are they called, the Minerals Council this week, Governor, did ring a bell. And they said to us, within the next 2 or 3 years, 90,000 mining jobs in South Africa will be lost as a result of Eskom's price increases. That's if Eskom has enough electricity to feed those mines. And by this time, in 2 or 3 years' time, says the Minerals Council, we might have only one gold mine left in South Africa, one gold mining company, maybe two. And that's the brutal reality of South Africa's macroeconomics.
Look, South Africa's mining system doesn't work with South Africa's current political climate. It was built with massive amounts of people, kind of corners were cut. I mean, debts were much higher in South Africa than they are overseas. And if you want to go to a place where you want to have similar death rates as Australia, for instance, you've got to have a different kind of mining system, which has far fewer workers, much more machinery, etc., etc. And of course, at the same time, government looks at mining to a certain extent, I think, politically, as if it's still that golden goose, or the goose with the golden eggs. But in reality, it's more like that goose that's about to die, and you need to basically give it life support, kind of like the construction sector, which we have similar kind of problems with here. Is that there are areas in this country which are in dire straits right now, and which might almost die unless support is given by government, and government not looking at them to say, oh, let's support these guys. It's more like looking how much can we get from them, what kind of concessions can we get from them, from these supposed massively profitable sectors, which doesn't exist at the moment.
And all bets potentially are off, of course, this Friday night when the ratings agency Moody's, the ratings agency that hates us least, because it's the only one that's got us on an investment grade rating, just one notch, or 1.5 notches, perhaps above junk. Do they pull the plug on South Africa's investment grade rating this Friday night? That's the topic of our discussion as we wrap up this evening's edition of Taking Stock.